Financial fraud has been a persistent problem throughout history, dating back over a century to an Italian swindler, Charles Ponzi, tricked investors in one of the earliest notorious financial scams. Now, as whispers of a significant recession in 2023 grow louder, authorities are becoming increasingly worried about the potential surge in financial fraud activity, since scammers often thrive during economic slumps. Recent scandals like those involving FTX and Theranos serve as stark reminders of the risk that unsuspecting investors face. Let's dive into some of the most infamous financial frauds in America of recent times and learn valuable lessons from these costly incidents. As we move further into 2023, the media spotlight on FTX has dimmed, yet investors continue their struggle to reclaim their funds. FTX's majority owner, Sam Bankman-Fried, along with other high-ranking executives, now find themselves awaiting trial in what became the largest financial fraud case of 2022. FTX, a cryptocurrency trading platform, was founded by Bankman-Fried in May of 2019. He was also the mastermind behind hedge fund Alameda Research, which he established with his friend and business partner Gary Wang. Flushed with $1.8 billion in private funding, Bankman-Fried and his fellow FTX executives are now accused of misusing the funds on luxurious Caribbean homes, new ventures, and political donations. In late 2022, the U.S. Securities and Exchange Commission charged Bankman-Fried with defrauding his company's investors by funneling money from FTX to Alameda Research between 2019 and 2022. Following the bankruptcy of both FTX and Alameda, Bankman-Fried was arrested in the Bahamas on fraud charges. By March 30th, 2023, he had pleaded not guilty to 13 criminal charges and was scheduled for an October trial. However, Bankman-Fried's legal team anticipates possible delays in these proceedings. In 2004, Stanford University sophomore Elizabeth Holmes left school to concentrate on her startup, Theranos. The company aimed to revolutionize blood testing, making it more efficient, accurate, and significantly faster. By 2009, Holmes had partnered with Ramesh Sunny Bhawani, who provided a $10 million loan to the budding enterprise. Theranos' growth skyrocketed, with the company valued at a staggering $10 billion by 2014. However, by 2015, their much-hyped automated compact testing device was deemed unfeasible by medical testing experts. In the aftermath, federal and state regulators filed wire fraud and conspiracy charges against Theranos. Buckling under mounting legal expenses, Theranos dissolved in June of 2018. Holmes and Bhawani were found guilty in November and December 22, receiving prison sentences of 11 and 12 years respectively. By March of 2023, Holmes owed $25 million to Theranos ABC, a company created by creditors, according to a new lawsuit. While her attorneys continue to appeal her sentence, Holmes remains free, with her prison term set to begin April of 2023. The 1980s witnessed numerous financial fraud cases, and Ivan Boesky was amongst the first Wall Street traders to be imprisoned for insider trading. Boesky refined his trading skills in the early 80s, focusing on the profitable arbitrage trading market. Known as Ivan the Terrible, Boesky amassed over $200 million through investments in corporate takeovers and mergers. In 1985, the U.S. Securities and Exchange Commission charged him with illegal profits from insider trading, alleging that he purchased stock and futures in companies based on insider information. In 1986, Boesky was found guilty of insider trading. As part of a plea deal that required him to record phone calls with other insider trading conspirators, including Michael Milken of Drexel Burnham Lambert, Boesky received a 3.5-year prison sentence. He also was fined $100 million and permanently was banned from the securities industry. Volsky's persona is said to have influenced certain aspects of the character Gordon Gekko, portrayed by Michael Douglas in the 1987 film Wall Street. Though Bernie Madoff, the former New York City fund manager, passed away in prison in April of 2021 at the age of 82, his story continues to reverberate in 2023. With the successful Netflix documentary, The Monster of Wall Street, it recounts the tale of the orchestrator of the most massive Ponzi scheme ever documented. Madoff, a former NASDAQ chair with strong connections to financial regulators, was already a Wall Street icon in the 1980s and 90s. His company, Bernard L. Madoff Investment Securities LLC, ranked as the 6th largest market maker in the S&P 500. However, over 17 years, Madoff, aided by company managers and back office staff, operated an enormous Ponzi scheme that lured investors with extraordinary returns. In reality, Madoff and his team fabricated stock trades and brokerage accounts, pocketing the investment funds. In 2008, during the peak of the Great Recession, Madoff's luck ran out, and a run on deposits and a subsequent investigation exposed that his firm had stolen over $19 billion from 40,000 investors. Madoff was arrested and charged with 11 counts of fraud, and in June of 2009, he was found guilty and sentenced to 150 years in prison. Enron, once hailed as America's most innovative company by Fortune magazine from 1996 to 2001, is now remembered as one of the largest corporate fraud cases in history. Established in 1985, the former dot-com giant prospered in trading natural gas and other commodities, and even launched its own digital commodity trading platform in 1999. Enron shares peaked at $90 in August of 2000, but within a year, finance executive Sharon Watkins warned CEO Ken Lay of a brewing accounting scandal that could bring the entire company down. Amidst the SEC investigations into its finances, Enron admitted in November of 2001 to overstating profits by nearly $600 million. Within approximately 2 months, the company declared bankruptcy, and the Justice Department initiated a criminal investigation into Enron. Prior to the bankruptcy announcement, though, Enron eliminated 4,000 jobs, and many former employees witnessed their entire pension plan evaporate. The Enron debacle did lead to one positive outcome: the passage of the Sarbanes-Oxley Act of 2002, which introduced stricter accounting rules for public companies. That sums up our top 5 largest financial fraud cases in the history of America. Remember to be on the lookout when you are investing for frauds and scams. If you found this content interesting, please like and subscribe, and we'll see you in the next video.